Hi, everybody. This is Marilyn. Do we have any audio? Thank you. This is Marilyn, and it is time for Welcome to My World. This is the 29th of, I'm sorry, the ninja lady's talking in my ear. It's the 29th of April. This is the last trading day of April, and it is a Friday. Happy Friday, everybody. So, we have certainly had these U.S. indices going down and down and down and down, haven't we? All morning. The trend has been down for quite pretty much the whole morning. There have been some nice trade possibilities. Bonds have suddenly decided they're going to go up for the rest of the day, I think, or at least they have for the last couple hours. When everything is going down like this, and they're all almost identical in the indices, all four of them. TF is a bit of a laggard compared to the others today, but they're all uniformly going down. Crude oil is going down. The bonds have headed up finally after they've chopped around for a little while, but this is the classic thing you see is that gold will start to go up. And that's certainly what happened today. With these indices selling off like they have been, the VIX is up. It's up trading right now at 1661. If the VIX goes on up into the 20s and then even heads into the 30s, we're going to see these indices really sell off. So this has been a bit of a happy week for the indices, and they responded mostly to FOMAC. So anyway, let's see, what are we talking about? We had two Wednesdays, Wednesday and Wednesday. That'd be kind of nice. Anyway, bonds have gone up, and the apex pattern on the C's put in some really nice trades. That I like trend catcher on my bonds. Keep in mind, bonds move very slowly. Rarely will they pop like crude oil and gold can do that too. It can pop very quickly. So what we have today, this is the last day, trading day of the month. And so over the weekend, everybody needs to think about closing out their April business plan for the month, and then get your May goals all set and see what your production has been, where if it's over what you wanted, then you might have just a minor little tweak. If it's below what you had set, then you need to figure out what you need to do to bring it up. And this is all strictly up to any individual. You have to decide what it is you want. And we've had some people this week, I've been in and out of trading all week. I haven't been able to sit down and really monitor the chat, but I've noticed that there have been some questions about, well, if I do this, is this making this much money a month unrealistic or whatever? This is the only thing on the planet Earth that you can do where you literally decide. This is 100% your decision. If you decide that what you want to do is, for instance, when you first start small and think, okay, if I can make $1,000 a month, okay, fine. Then stop trying to figure out the trades and the money and all that stuff, you'll drive yourself insane. The first thing to figure out is, if that's what I want, what do I have to do to get there? So if that's what you decide you want, you break that down into the bite size. You go down to, okay, that means you have to make $250 a week, which means that every day you have to make $50, which means that how do you plan to make $50 a day? That's the question. And all you do is add zeros, or I mean, whatever amount of money it is that you decide you want to do. And then you sit down and ask yourself, okay, I'm going to trade which markets? Start with one, then add a second. Then you decide, how many ticks do I need to make my goal for the day? And if it's, I don't know, whatever, if it's 30 ticks, let's just say, if it's 30 ticks, how many trades do you need in the market you want to take to make 30 ticks? And if you decide, okay, I want to make 3 trades of 10 ticks apiece, okay, fine. Then go back in the chart of whatever that market is and figure out where the entries are and where the exits are that are going to give you what you want. And so once you've accomplished that, then you start to fine tune it. But don't get this idea in your head that this is, there's nothing magic here. Daryl has an excellent post in the forum about his 5% rule. And I really encourage you to look at that and employ that, because it will, it's amazing what just making 5% of your, he's got it all laid out about how you manage your risk and how you build your account, and how you from time to time take money out of it. This isn't about, you don't need $1 bazillion to trade the kinds of things we're trading unless you're, I don't know, some hedge fund manager. This is retail trading at its best. We've also had a couple questions in here about margin. Nadex, if you're trading the Nadex exchange, you don't have to worry about margin, because whatever it is that you paid for your trade is the maximum that you can lose. So in other words, on their side of that trade, they have no risk. You have all the risk, which is why they don't put out, 7,000 contracts in one strike. They just put out enough, but they have no way to lay off their risk on their side. You assume all the risk, and the risk is exactly what you have paid for that trade. If you paid $10 to get into that trade, then your risk is $10. There is no way you can lose more than $10 on that trade. Now, if you've stepped up to futures, that is a whole different animal, and there are 2 margins. You need to understand what the difference is. The brokerage firms all say this is their margin, okay? And it'll be some, I think somebody in here pointed out that NQ has a $4,228 margin, and it does. So you need to absolutely know that. It does. If you place that trade and you leave it on for 2 or 3 weeks because you're a trend trader, major trend trader, you must have that much in your account or be fully expect, and you can lose way, 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 way more than that too. So that's one track. The track all of us are using at Apex, because we are basically day trading, is if you go over one column on your brokerage, it will say the the day margin. And for NQ and YM and some of the others, it's $500. That $500 applies to 1 day of trading. That's if your trade is on for 1 day, that's all you have to have. But then be sure you understand what 1 day is. 1 day doesn't mean from the time you get up in the morning until the time you go to bed at night. That's not 1 day to the exchange. 1 day to them is from settlement to the next close. So everything that we trade electronically, and I'm not saying absolutely every last thing, but for the most part, you need to verify on the CME website so you have the exact hours of the markets you trade. But generally speaking, they close at 4:15 in the afternoon. Okay, they reopen again 45 minutes later at 5 o'clock. This is Globex, and it is electronic trading. If you have your trade on in that timeline from that close until the next morning, the open 45 minutes later, you're going to have a serious problem with that margin, because that's when the 4,200 and however many dollars it is will kick in. So for what we're doing, you can take as many trades in NQ as you want at $500 per contract, as many times as you want, and your account does not have to be, it has to have that plus a cushion in there, because if it goes against you, they'll close your trade out, whether you want to or not. Doesn't matter. So I hope that makes it a little more clear that for people that are new, that's a little confusing at first about those two different margin requirements. But if you enter a trade at 3 o'clock in the afternoon, it'll be a $500 margin. And if you take that trade off by, say, 4 o'clock, 4:05, that's all you need. And then you can enter the trade again at 5 o'clock or whenever you'd like, and hold it all night. I mean, all real people night, and it's still considered a day trade because it's from the close to the open 45 minutes later. That is the timeline in there, and that's a bit of a no man's land if you are a small retail trader. Don't ever hold a trade through that. So that's my soapbox for today. And yes, Lou has pointed out you can get a margin call, and that's not going to be a nice, happy conversation. So those are the things that you need to. That I also put a post in the forum. I don't know, a couple, 3 or 4 months ago about business plan and how you have to kind of make your own, because you're a one-man band and you don't have employees and you don't have all this stuff that you normally you can buy books about how to make a business plan and all that stuff. That doesn't really apply to the kind of trading we do. So you have to just kind of make your own. But ask yourself, what do you want at the end of the year? Always start at the end. Start with what you want at the end of the month, at the end of the year, at the end of 5 years, whatever it is, and then work backwards. What do you have to do to make that happen? How many ticks do you need? In what markets? How many trades? Write that down. Every single day, start with your little written plan, and you may not get the ticks you want on the market that you really prefer that day, because that day that market might just have a jerk bus driver. But at least you've got your shopping list for 3 markets or 4 markets, and you put them in order of priority. You like this one best, and if that's not giving you anything, you're going to go to this one and this one. That's it. That will save you from trying to start in the morning by looking at 17 different markets and thinking, gee, I wonder what I can trade today to make some money. That will kill you. You have to already know and start with your little shopping list of what you want. I want 3 trades on this. I want 15 ticks on this trade. I will accept 10 on this trade. And then on this market, I want 20 ticks, and so it goes. And then you expand from that. You don't branch out into a whole bunch of different markets and a whole bunch of different trades and all this stuff, because it will make you crazy real fast. The way you boost your trading is more contracts. You do the same little trades you've been doing with one contract. And then when you're very successful with that, add another one. And so on. That's how you build this. So, okay, I'll get off my soapbox now. So next week, you're going to start a new month, a new trading month, the month of May, with your goals already set for the end of May. How much do you want to make at the end of May? Then work it backwards. What's going to get you to where you want to go? And it's up to you. Nobody can figure that out for you. You have to figure it out for yourself. We can give you a little guidance and a little help, but you're going to have to sit down and crunch your own numbers. So next week, for the economic numbers that come out, we don't have much in the U.S. On Monday. New home sales comes out Monday morning about 10, and then it starts to pick up Tuesday. Tuesday morning is a little bit more. Wednesday, not so much, but it's the first trading day of the trading month. So there's likely to be some repositioning of big money. And keep in mind, what we want to do is follow the money. Doesn't matter if it goes up, doesn't matter if it goes down. Doesn't matter. We just want to follow where the big money is going, because that's what moves the market. And if you notice on my time and sales here, I don't have any little 1, 2, and 3 contracts on here. I mean, somebody that's putting in a 93 lot of crude oil to sell it at $45.55. If I'm in a crude oil trade or trying to decide what I want to do, I sure do want to know about that. And here's 29 at the buy for $45.58. So follow the big money too. You want to know where they are. So I hope that makes things clear as mud. If not, be sure and ask, because there's a lot of people in this room that have been trading a while, and they have really, really good ideas to help some of the newer people. Because keep in mind, if you're newer, we've all been there, every single one of us. And at first, this can really overwhelm you. So anyway, I hope everybody has a wonderful weekend and a safe weekend. And I did want to mention one thing. Sometimes I talk about how it can get real interesting going into the close. If you've never seen that before, scroll back and look at yesterday afternoon, the last hour, say from about 3:15 in the indices. They decided to set the pace for today right then. Anyway, I hope you all have a wonderful weekend, and I will see you on Monday. Thanks. This has been my view in my world. in Apex land. Brought to you by Apex Investing. Thanks.